the biggest risks are to the apparel and footwear spaces. About over 80% of their products are produced in China. The companies that are less exposed are, let's say, boat makers like Brunswick that produce in the United States of America, but also golf equipment companies are probably less exposed. So apparel and footwear are the most exposed right now.
But aside from the direct impact in terms of tariffs or some sort of trade war affecting the supply chain, if, for instance, there's an increase in tariffs in autos, for instance, which we will see or likely see, does that make you more concerned about the companies you cover? Are there certain goods that you say, if consumers have to pay more money out of their wallets for these goods, that will make them less likely to spend during the holidays?
Well, high average ticket goods will be an issue, but our view is we're pretty bullish on retail right now, and I cover apparel, footwear, luxury. I cover a lot of sectors. I actually feel pretty good about the consumer right now. They're showing their ability to spend. They're actually paying up for things. They're trading up. We haven't heard that word trading up in probably 15 years.
Randy, what do you think about the fashion cycle? We hear a lot of people say that that's sort of benefiting some of the retailers, maybe even the department stores. So, yes, maybe their strategy is getting better, but actually they're getting lucky because the fashion cycle is something that people are wanting to buy into.
So we have a denim cycle right now. We also have a lot of color in the marketplace. But I think what's really interesting to me that no one talks about is companies are seeing store traffic improve while their e-commerce businesses improve as well. TJX used to be the big retailer over the last decade, but now you're seeing TJX plus Abercrombie plus Gap and others do well in the marketplace. The other thing you're seeing is companies do well in retail despite Amazon. So I think that's pretty important. It shows you how strong the consumer really is right now.
This is a fashion-related question. For years, we would sit up here and all talk about how fashion was over. Do you remember that? That there were no new fashion trends.
Right.
People didn't care about fashion. All they cared about was experiences, all the money that they had spent on clothes they were now using for the iPhone.
Sure.
Was that a myth, and it was just an economic story, meaning the economy needed to come back? Or was there really some kind of fashion lull? All the fashion designers had decided to become boring? I mean, what really happened?
We had some shifts. Look, we had an athletic apparel cycle that took away from the denim cycle. We also had a lot of hoopla around Amazon, right? So they were taking market share. People thought every retailer was going to zero. We were on this program about the beginning of the year where we said, look, retailers are fighting back. They're improving their supply chains. The consumer is strong. And not every single retailer is going to zero. And in fact, there is a lot of rationalization in the marketplace with the bankruptcy of Toys R Us, Bon-Ton, et cetera, that actually helps the retailers get stronger and stronger as supply is taken out of the market.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.